Hey guys, welcome back to Ivy Crypto. Hope you're having a wonderful weekend. Today I want to talk about one of the investment strategies that I use, which is dollar cost averaging. I don't want to make this video super long like some of the other ones on YouTube, so let's get right into it. Dollar cost averaging is an approach to investing that involves periodically investing a set amount of money regardless of the market price of what you're buying. It is often associated with passive investing strategies in which you want to minimize the time you spend in administering your portfolio. There's some key advantages to dollar cost averaging as it reduces the effect that in terms of psychology in timing the market. By committing to dollar cost averaging approach, you avoid the risk that you will make counterproductive decisions out of greed or fear, as we see a lot in crypto, such as buying more when prices are rising or panic selling when prices decline. With dollar cost averaging, you are forced to focus on contributing a set amount of money each period while ignoring the price of each individual purchase, which is what you want to do with cryptocurrency. So for me, I use dollar cost averaging in my long-term holds. Key there, guys, long-term. I personally don't feel that dollar cost averaging is a good strategy for short-term. So for example, with Venus, I don't dollar cost average into Venus because I feel like that's a 4 to 5x in the next 6 months. I don't want to invest in it week by week. I'm just going to buy a bunch, hold it, and sell it when I think the price is good. Whereas there's about 4 or 5 cryptos that I invest into weekly that I want to build up, and then when I get to a certain amount, I'll stop, I'll hold them, and then eventually 5, maybe 10 years in the future, I'll sell. So in this here, you'll see that this person invests $100 each month into stocks, and you'll see the price of the stock each month is different, and how much shares they get to purchase is different based on the price. The average price is $9.93, but the key here is that every month, regardless, they are investing. I personally do dollar cost averaging weekly as I get paid weekly, and I also feel like with crypto I get more bang for my buck because the prices are so volatile, they're always changing. I feel like if I did it monthly I wouldn't get as good deals because if we look at some of the price charts, the price fluctuates absolutely ridiculously day to day, let alone month to month. So here we'll see another example of dollar cost averaging with the S&P 500 index fund, which is a stock. Each pay, this person's contributing $50. You can see how many shares they've bought, what they own total, and the total value of their portfolio. It is really important to note, guys, that because this is a long-term strategy, it's not always going to mean better return on your investment. Sometimes it does and sometimes it doesn't. Binance posted this, which is the comparison between investing a lump sum versus dollar cost averaging $100 each month. Now in this particular example, that there was a 0 return on the lump sum investment and a 20% return by investing $100 monthly. Now obviously this person got quite lucky because the price of their crypto did drop, for a period there, and then it ended up going back up. But this is not always the case because sometimes the price goes like that. It goes north. And so you're not going to get a better return, but what you are going to get is a set amount, and you're going to build your portfolio as you go along. Now I'm going to show you a spreadsheet of how I invest, as well as talking about some pros and cons later in the video. Alright guys, so here you can see that I dollar cost average into Luna, which isn't actually something I've talked about on the channel just yet, but I do have a video coming on that soon. So here you can see weeks 1 to 4 in June and what I've invested. But before I talk about that, I really want to break this down simply. Here is my pay, for example. Here are my expenses and here are my spendings, which leaves me $400 to invest. Now this isn't directly related to me, I just wanted to keep it very simple. That would leave me $400 per week to invest. Now I can break that up into $50 of crypto, $100 of crypto, or I can invest the whole $400 into something. For the sake of this example, I'm going to show you what I am actually investing, which is here. I just did this so you can see what I mean by dollar cost averaging and breaking it up. So for me, I invested $150 a week into Luna in the month of June. You can see the average cost was anything from $662 at the high to the low of $463, and I got anywhere between 22 and 32 coins. Now, am I fast? Look, not really, because I'm holding Luna for at least 5 years, at least. And once I get to a certain amount of Luna, whether that's 1,000, 5,000, 10,000, whatever it may be, I will stop dollar cost averaging. Now here you will see that I've also dollar cost averaged into a stock called Unity Software. I'll explain some reasons. Maybe in another video. I do like to focus this channel on cryptos, but Unity Software is doing a lot in the metaverse space, which I think is going to be absolutely revolutionary in the next 10 years. So I do want to get on this bandwagon, and as you can see, the purchase cost is quite high. So my $150 are only getting me 1 point something of a share, but I don't mind because I think this could be $1,000. Sorry, I think the purchase price could be $1,000 in a few years. So I see the potential in this one. I am a long-term holder, and this could be something that I even pass on to my kids one day. So I do really see the long-term potential in this. The point of the video is, guys, that every month, week, fortnight, whatever it may be, you have to invest a set amount of money into a long-term investment. Now, there's plenty of cryptos out there that are absolute steals right now. You know, Matic, Luna, XXX Nifty, VRA, VeChain, VET. Sorry, not VeChain, FET, Fetch AI, Ocean, just to name a few. There's so many out there. Seller Network. You know, there's so many out there that are absolutely tiny in market cap and in price, and in 5 years could blow up. Even if you dollar cost average $50 into some of these, like Axion, you can have millions and millions and millions of them in 5 years time, and if the price even rises 5x, 10x, you can make a lot of money. So just think about that, guys. I do want to talk about some pros and cons. So some pros of dollar cost averaging is it's an automatic approach that can help you refrain from being swayed by the latest news and the effects that it has on the markets, especially with crypto being so crazy. And you may actually save a significant amount of time by using dollar cost averaging and making regular purchases of your Bitcoins or your VeChains or whatever it may be, instead of regularly checking the news in order to try and time the market, which is almost impossible. And leveraging this strategy can help you detach emotions from your investing. And by relying on an automatic process, you can avoid the emotional roller coaster that is cryptocurrency. Another benefit is that it helps avoid the risks arising from mistiming the market, and it is suitable for those in long-term investing. Now, there's a couple of downfalls here. One of the major ones that most people talk about is that you could miss out on some very appealing gains. For example, Bitcoin can experience very strong price fluctuations, so utilizing this strategy can cause you to miss out on some great buying opportunities, therefore generating lower returns, which we talked about previously. But for me, the biggest drawback of dollar cost averaging is the transaction fees. So depending on what exchange you're using, that should probably determine how often you invest. Now, I use Binance and Coinspot. I don't use Uniswap much for my dollar cost averaging, and I do use PancakeSwap. So PancakeSwap is fine for transaction fees. I'm not too fussed. Coinspot's okay, and so is Binance. But if you are using something that does have high transaction fees, maybe you should invest fortnightly or even monthly to avoid that. So that's all on dollar cost averaging, guys. I hope you enjoyed the video. Give it a thumbs up. Don't forget to subscribe to the channel. Let me know in the comments if you dollar cost average and what into, and any other videos that you want me to make on some strategies. And as always, guys, watch this space.